you got to find the right people for this. You got to find the right attorneys who understand. You got to find the right help advisors, people who get it. And, sometimes you might need people to double check each other's work.
Welcome everyone to today's Startup Equity Matters. I'm excited about this one. I have Chris Hoffmann, equity admin guy, here with us today. So here you have two of the biggest equity nerds in town.
Oh yeah. Oh yeah.
Anything to do with cap tables, if it can be done between us, we've probably done it. So that's pretty cool. Yeah, I met Chris in Utah, which was
Yeah.
amazing. It was my birthday, and and Chris made the effort to come all the way up and chat with me, and I was so grateful that he did that. And yeah, Chris has got wonderful energy, and he absolutely loves helping startups with their cap tables. And that's what we're all about here on the pod. So the topic today is going to be how to not mess up your cap table. You know, there is a lot of ways to make those mistakes.
Yeah.
Unfortunately, through the first few rounds and the first few years, you founders out there, you've never seen this stuff before, and it's pretty technical, it's pretty complicated. And so we're here to try and unpack some of the lessons, talk about some of the biggest mistakes, and then talk about how we can mitigate and avoid them, and make sure your cap tables are sweet. Because when you get to Series A and you've got like a VC coming in, you want them to be like, bam, this is a great cap table, let's go. So
Yeah.
welcome, Chris.
Thank you. Thank you, Jason. Thanks for having me on. It's good to be here. And
Ah,
actually, you're one of the first people I'd say I met in person, partners, clients, anybody. There's only a handful because I started this business remote, and I've been remote for a long time. And so it's so cool to actually meet you in person.
it was really cool. I was very impressed with Utah. I didn't know too much about it. I was out there for a ski with a VC day, which is one of the coolest work
Yeah.
days you could possibly have. Um, and yeah, there was a really vibrant tech community out there in Utah, right?
Yeah. It's been growing like crazy. I've lived here almost my whole life since I was about 7. And it's amazing. The city I live in is called Lehigh, and so they coined it Silicon Slopes. Back when Adobe purchased this big lot on the mountain, and they came into Utah, and then all of a sudden these tech companies started, and there were a few before that, and they called it Silicon Slopes. And you didn't think too much of it. The city of Lehigh was a pioneer town, you could say. Settled, very farm country, and all of a sudden now it is. I mean, it's kind of the hub. This and Salt Lake are the two hubs of tech, of startups, of venture capital in Utah, I'd say. And it's still growing. There's so much room for growth here. So it's been
Yeah.
cool to watch.
I'm definitely coming back next January for the ski with the
Sweet.
VC day. So anyone over there in the US, like, get it on your radar for early next year. There's a
Yes.
pretty cool tech event. There's a pretty cool like tech event there. I think it's around the same time. Is that when you have it?
Yeah, I believe it's between January and February. It's called the
Mm-hmm.
Silicon, what is it? Silicon Slopes Summit,
Mm-hmm.
something like that. Don't
Get
quote me on
amongst it.
that, but
Get amongst
the
it.
summit.
I'm
Yeah,
off.
last they've had some very large speakers, very prominent CEOs, and it's a big event. I mean, there's thousands of people that come, so I'd say
Mhm.
it's probably one of the bigger events in Utah.
Really high quality salespeople are here in Utah. I noticed as I
Yeah,
was flying in on a Monday morning, there was like a ton of people flying out. So it looked like they were off, all around the US, just getting it done. Anyway, it was cool. So yeah,
yeah,
look, we've known each other for a little while now. I
yeah,
think I first saw you, yeah, when I was just like scoping out the US and who's who in the zoo, and
yeah.
who's helping, people with these cap table problems. And yeah, like, you've been so helpful, to us in our journey over there, and we're very grateful. So I'm excited to be able to have you on today. Tell
Thank
us a
you.
bit about what you're doing day to day. Yeah, equity, admin, co.
Yeah, the most vanilla, bland name, but that's great for SEO, I would say. Yeah.
We were originally called Smart Equity. But
Oh, cool.
yeah.
Yeah. Yeah, I'd love to share some more. So I've been doing this business for about 4 years. I've been in the world of equity for about 7 or 8 years now. And really, I didn't know anything about it before. I tried, I tried going through multiple degree programs in college and went to school for about 7 years and just had too many credits and I just couldn't finish. And I found this world of equity actually here in Utah and just fell in love with it. It was just such a cool thing. You don't hear that often. And I kind of relate it to accountants when they're like, oh, yeah, I love accounting. But a
Hmm.
lot of people from the outside world are like, that sounds really boring. And
Yeah.
funny enough, I actually had a sales call the other day where someone was like, sounds really boring, but very much what we need. And so,
Oh, by the
it,
way, we are allowed to talk about Carter on this pod, just in case you were concerned, because I know you do a lot of work with Carter.
okay,
So I'm just going to get that out there like early on.
okay, I appreciate that. So I actually started this journey at Carta. They were
Yeah,
one company out of 100 that I applied for, and I had no idea what they did.
yeah.
And that's where I found this world of equity and just fell in love with cap tables. And it was so cool because I got to talk to founders and investors every day and started going to events where I met these people who were really starting these small companies that now some of them are changing the world. Some of
Totally.
them are series A, B, C, some are very profitable. And
Mm.
it's so cool to watch that cycle of a company and get to be a part of it and kind of like see what happens in the background, watch the cap table and what happens when they raise funding. And so I found this world, and about 3 years into it, we were doing this service that I do now, which is equity administration as a service on top of the platform. And Carta decided to stop doing that service. They just felt it was a little bit of a liability having the platform and the service at the time. And so about a year after that, I said, "Can I just go do this on my own? There's such this demand for it. People are asking for it all the time, and I'd love to start it." And they were very supportive in me leaving and starting that on my own. So it's been about 4 years now. Actually, I just passed for the 4 year mark of starting the business, and about 3.5 years of being full time in it. Um, and we started this company with the focus on enterprise companies, and it was more so for the work was a little bit more consistent, right? They have a lot more equity activity going on. Where you look at a startup and it's they raise a round of financing and that's their equity activity. They hire a few here and there, but there's really not much. So we focused on this world of the enterprise companies, and it was really awesome. But then I started meeting these newer founders at events, and I started meeting, venture capitalists and other investors who wanted their founders to understand this world of equity. And I thought, okay, that's a cool opportunity for us to bring what we know about the enterprise companies who are looking to go public, right? Or who would come to us with some kind of problem, just like we'll talk about today, and be able to bring that to the startup founders and say, these are things that we've seen that work later on. These are things that maybe 10 years down the road are not going to look the best, giving away all of your equity, for example, is just a very, it's a very simple one.
Common
Um,
problem. Yeah.
yeah, a very common problem. Can be strategic, but not always. And so we brought that to the earlier stage, and now we're working kind of a split model. It's kind of half with mid to late stage companies and helping them with the equity activity on a daily basis. And then half with newer startups and from brand newly incorporated startups. Um, I've actually started working with a couple programs. One is the Sandbox program, which is here in Utah universities. It's a kind of an incubator, you could say, or an accelerator, you could say, that the students who are going through their school programs are able to then build a tech company within a year and get credit for it, which is so cool. I'm like, I wish I would have had that. I probably would have graduated back then
Totally.
and
Instead of
built a
like going
company.
to economics and hearing how the price of
Yeah.
meat goes up, the demand for chicken will increase. You're like, oh no, duh.
Yes. Exactly. You're like, I'd rather build a company so I can afford the meat in 10 years.
Yeah, I know what's
Uh,
going on. I need to make some money.
yeah. And so it's cool to start working with these earlier stage companies and really help them understand what they want to understand. Some founders really honestly will just say, you handle it, you worry about that, help me when I want to understand something or have a question, but you focus on that. There's other founders who they're raising a funding round and they really want to get in the weeds and really want to understand, or there's things that we can kind of warn them off with different investor term sheets and just some things like that. So that's what we're doing these days, is kind of a split model of helping earlier stage founders and then also helping later stage. And we love cap tables.
Yeah, I love it. Someone's got to do it. It's super important.
Yeah.
I think besides finding product market fit and building a great team, like managing your equity is like probably the third most important thing because you got to use it
Yeah,
for funding. If you get it wrong, it can kill your company.
yeah,
It's the actual wealth creation engine of everything you're doing, and it's really up there with one of the most important elements of building a tech company. So yeah, it's
yeah.
great that you're in there helping out. Maybe
Yeah,
we
thank you.
start with the later stage. Well, first of all, I love that one of the reasons I love being in, the cap table space, the equity space, is because of the people we get to help, right? Like the
Yeah,
founders, the innovators, the energy they bring, the cool problems they're solving. That's, I
yeah,
guess, a really interesting insight for anyone that's listening that might not be a founder, or if you want to bring cool people into the industry, make sure you highlight that because it gives you a lot of energy, doesn't it?
yeah. Oh, yeah. It's everything. Being around the people,
Mm.
working with these people every day, it makes me want to build a better company of my own, right?
Well,
It's like
yeah,
these people have so much high energy, and sometimes I'm like, oh, I wish I could, I wish I had that energy or had that drive to really just hustle. But
you
it's cool.
do.
It's
You
cool
seem
witnessing
to.
that
You seem to.
some days.
Um, cool. Well, let's start at enterprise. Let's talk about, because a lot of times, I mean, almost every other guest we've had has been kind of, pre-seed, Series A-ish guests, like a little bit of
Yeah,
Series A, Series B. We've had some people on that have, like a Canva guy who participated in their recent secondary. So
cool.
we've done a little bit of late stage stuff on the pod, but let's talk a little bit about enterprise cap tables. I think even if you're in the early stage, it's nice to look a bit into the future and learn a little bit
Yeah.
about what works, what doesn't work, and some of the lessons that we can bring. And then maybe we can come back to the beginning and how you work with companies in the beginning and how we can set it up correctly.
Yeah, yeah, definitely. I have some thoughts on I have many thoughts always going
So
through
What
my
does
head
a
about cap tables.
what does it look like? Let's go like, what does a 3,000 employee cap table like look like on a monthly basis?
Dude, it's crazy. You have you have people exercising all the time. It really depends on what stage. So if we're looking at let's just say Series C to Series D,
Hmm.
a lot more companies these days I'd say are transitioning to RSUs from options. So when you're early stage, you're doing RSAs, options, very typical. People are exercising their options if they really believe in the company, if they choose to. Once you start getting usually at a point where the fair market value or the FMV is getting a little bit too high, that it's going to be thousands of dollars to exercise. Some companies are moving now to RSUs, and it's a big move to RSUs once you think about going public as a late stage enterprise company. So if you're a year, 2 years, 3 years away, a lot of times they're transitioning to that type of award. And RSU is restricted stock unit. I'm sure many of the listeners know about that, but restricted stock unit, it's essentially an award that you vest, same as options, same as other awards. You vest it over oftentimes a 4 year period, usually quarterly, and there's a trigger on it, so none of those shares become yours usually until a liquidity event happens, an IPO or a sale of some type. Some companies are moving into single trigger RSUs, as they call them, which means they can vest and then they settle, which means you can actually receive the shares and the company withholds the taxes for you. But most companies at that stage, they don't really have, a lot of them have a lot of cash, but they don't technically want to use that cash to withhold the taxes for you because that's
I
a
wouldn't.
lot of cash.
Yeah. I've heard of some companies having trouble with their balance sheet in that situation where you're just building up a liability over time, and then you're like, well, we're going to raise capital just to cover this liability.
Yeah, that is one of the mess ups right there is that sometimes companies do that and then they have to raise funding solely with the purpose to cover taxes, provide some type of liquidity to employees
Mm.
that doesn't even help them as a company to grow, right?
Not
Which
really
is
adding
usually
a
what
lot of
the
value.
raising is for.
I think even Stripe was like the super example of that. I'm sure I heard on the All In
Yeah.
pod they had some dramas with that. I know it's a private company, but I think that was a thing. And so the double trigger, well, I love this double trigger RSU, right? Because it creates a lot of flexibility and advantages.
Yeah. And it's really simple. Companies don't, with the double trigger, they don't have any type of expense. that they have to write off, so they don't have to worry about calculating that. It's really just a delayed settlement in the future, assuming that they go IPO, assuming that there's some type of sale. So companies will do that to simplify.
Mm.
Um, that means usually in the later stages when they transition to RSUs, there's a lot less exercising because you have the earlier employees who received options who are exercising. But even then, if you if you take an employee, for example, for example, I'll use some made up numbers, but when I was exercising some options from a previous company, I had a strike price of around $1. The FMV at the time, or the fair market value, was about $14. I had about 3,000 shares. That difference in $13, incentive stock options in the US give the benefit of not having to pay taxes when you exercise them. But there is something called alternative minimum tax, or AMT, which is essentially a way for the government to say, we're not going to let you get away without paying some type of tax. And AMT usually is triggered when there's a big difference between what you're paying for the shares and what the shares are worth.
Oh, I never heard
I
of that.
got
What's a big
it's
difference?
a So big, I would say, $5, $10 difference, depending on how many shares you have.
Mm.
It can be a lot. I personally, it was a good tax year for me, meaning I wrote off a lot, so I didn't have to pay any AMT or any extra. But I've heard of some friends of mine who had much larger, uh, I think it was like $1 versus $20, and they had 10,000 shares and they got hit with thousands of
So
this
AMT,
tax because there's such a difference.
so AMT, so it's a tax on unrealized gains.
You could say that, yeah,
Wow.
because
You don't have the cash to pay the tax because you haven't had liquidity. So that's tough as a holder of that stock.
it is. It's a really interesting thing. And I don't know all the details and I don't know all the history of
Mhm.
it. But when you have non-qualified stock options in the US, you do have to pay. It's standard to withhold taxes. So if I am exercising at $1 and my shares are worth $10, the FMV is $10, then I will have to pay taxes on that $9 gain.
Mm.
Incentive stock options get rid of that
Mm.
unless you could say unless you're not paying enough as a taxpayer of the US,
Mm.
then they're going to hit you with some kind of bill, and that can really get people.
Let me run one of my theories by you that I've been
Yeah,
advocating for. So, with RSUs and ISOs and NSOs, they've each got their strengths and weaknesses. And so the two best methods, in my opinion, RSUs I think are actually quite good, and I have heard them even used in early stage companies when there's a double trigger, and I think it's really balanced
yeah,
because the tax is balanced with the cash flow event, and like largely the issuance of the equity and the tax event is balanced with the cash flow.
yeah,
And
yeah,
similarly, I feel like with NSOs, if you have a long exercise period, you can do the same thing. So in some countries, including Australia, we have 10 years or even unlimited exercise periods, which means that,
okay,
and with our tax law here, you only have to pay tax when you sell them. And so it's perfect because you really only
okay,
exercise when you're at an exit event and you pay the tax and
yeah,
everything's nice and balanced. And I feel like with NSOs in the US, you can do the same thing if you have a long exercise period, because then you're only
yeah,
exercising at the exit event or when there's a dividend. And in both instances, you're happy to make a payment because you got cash flow. I don't know. What do you think?
yeah, yeah. I'd say it's kind of safer, more conservative to look at it that way. I think the issue comes when employees leave companies, but they still believe the company is going to do well, and they have some companies these days are extending that exercise period to 1 year, 2 years. You know,
It's really
the amount of
short.
time that,
It's really short
yeah,
in the US. I'm advocating for like, let's make it long. Like, why? Like, if the employees
yeah,
if they've earned them, there's no need to make them make a payment. I mean, most employees only have like they don't have money for a share portfolio. Like, I hope they do, but
yeah,
they don't. And so then they have like this chunk of their wealth like held up in an exercise payment. Anyway,
yeah,
I'd like to see it longer, but it hasn't quite settled in over there yet.
yeah. I
Mm.
feel like the 90 days to exercise after you leave a company is still very standard,
The
which, like you said, is
ISO,
not enough
yeah. The
time
ISO
if you
has
have
to
a
be
lot.
90 days, right? With ISO. Yeah.
Yeah. And that's where it came from. And
Mm.
that's why it's 90 days. But like you said, it's kind of outdated.
I
And the
hope it
companies that are
changes.
moving toward, yeah, toward like 1 year or 2 years, or even they give them the length of the term. So like if it's a 10-year term, they give them, they say, hey, even if you leave, you have that time to exercise.
I think in the interest of valuing it and fairness, and I know like US is very, I love this about the US, very capitalistic. Even if you like we're trying to attack the best talent, right? So we've got the best
Yeah.
plan that, and I see some ridiculously employee-friendly plans, and I don't think you need to like give
Yeah.
them everything, like it needs to be
Yeah.
balanced. So I think one way you can make it balanced is just to say, well, you definitely have to earn them, and we're going to have vesting. But
Yeah.
once you've vested it, we're going to give you a really long time to exercise because we don't want you to have this punitive exercise payment. I may or may
Yeah.
not make progress with this, but I'm going to keep talking about it until someone tells me I'm crazy or we see some.
I love that mission, honestly.
And of course, I'm totally open to, people can do anything they want. I'm not here to tell people what to do, just sort of like chat about ideas. All right, so we've talked a
Yeah.
bit about RSUs and I imagine when you've got like, Series C, Series D, you've got people coming and going all the time. So you're granting,
Yeah.
you're hitting cliffs, you're vesting, and it's just so much going on. You're exercising, like there's
Yeah.
there's a lot of admin. Like it's almost a daily or month, like at least it's got to be a weekly occurrence. You're just constantly working with the companies to help them manage all these transactions.
Yeah. Yeah. Some companies we work with daily. I mean, every single day. Because oftentimes there's, 3 to 5 to 10 terminations. And that's not the company, not the company terminating the employee, just employees leaving.
Hmm.
And then, like you're saying, people are being hired every week. And if companies are giving them option grants or RSUs every single quarter, then some of our clients have 200, 300 or more grants, new grants every single quarter. And so it's a lot of work when the board consent happens,
Hmm.
but then also it's a daily thing because if we think about keeping the cap table always up to date. And that's where softwares like Cake come into place, right? It's so important to, in my opinion, to have a software because you can't manage this in Excel. And I've
Yeah.
seen companies who try at Series C
Oh my.
managing this in Excel, and it just there's no way. And I
I
just
mean, as
highly
an
discourage
accountant and a
it.
former CFO, it gives me a rash to think about managing that in a spreadsheet. Like that would be
Yes.
gnarly.
Yeah, no, it's insane to see. But so using a software is so important. But then the other thing is if even if you have a software, you got to make sure that you're staying up to date. So whether that's your HRIS can integrate with the software and automatically take care of the terminations, or whether if it's a manual process, you going in and terminating, because if you and there this happens so often, especially with later stage companies, the company or the employee leaves, they do the termination in their HRIS. They forget to do it in their equity management software. 30 days goes by, 90 days goes by. They audit it maybe 6 months later. Maybe this employee has then, um, maybe the employee had exercised, after 60 days manually, they handed them a check and handed them an exercise form and the company never recorded it. And then they never recorded the termination. That's going to mess with your expense accounting. That's going to mess with your cap table. That's going to mess with any due diligence that you're going through if you're doing a funding round. It's really like it needs to be kept up to date. And that's where we
To
see a lot
mention,
of mess ups.
not to mention the individual nightmare for that employee who thinks they've exercised, but they're not on the cap table and
Yeah.
it may never get picked up. Like I'm not like those sort of things can
Yeah.
totally slip through the cracks.
And then they're freaking out because they see, oh, my options have expired, or like, I, yeah,
Right.
that's where we see a lot of, I would say a lot of mess ups is when those daily transactions happen, just
Mm.
making sure it's kept up to date always. And that's why I think auditing is so important. Even a monthly quick audit of who are my people who have left? Who are my people who have come here? Have we modified any grants? Look at the board consents. Have we got all the board consents into our system? Have we made sure all the updates are done? I think is really important, especially when you're getting later stage, but
Yeah.
also when you're early stage.
And from an employer brand perspective, you want all this stuff to be tip top so people want to work.
Yeah,
When people leave, they speak about you highly, and then you're more
yeah,
likely to attract really good quality people. Um, yeah, totally. And I guess it is more about the employees at that stage, like the investor side of things. Is it still super complicated, or is it just still it's a lot easier, I suppose, because the numbers are a lot smaller and the transactions aren't happening too often.
yeah, yeah. Investors are usually a lot simpler.
Mm.
The case when it when that changes is if a lot of times with crowdfunding companies, of course, as you can imagine, if they have thousands of people on their cap table. Also, we have a couple of clients right now who allow transfers at the later stage. They're like Series D, Series E, and
Hmm.
they allow their employees who are holders and their investors to go out and find new investors.
Yeah,
The
cool.
employees and investors, the shareholders have to do their own, have to do their own checks, which is great, and I think that's needed. But if they find an investor and the investor is willing to pay, the current price for those, then they can sign some agreements and get with the company, and the company allows that. And one of our clients allows that and has them happening twice a day. Those transfers happening twice a day. And you can imagine that would get, if those aren't entered or if one slips through the cracks, that can cause a big mess too when it comes to audits, when it comes to reporting your financial statements, all reporting shareholder. As you get older, there's some agencies that, sorry, as you get older, as a company grows and gets bigger and they're looking maybe to go public or looking to um, just be audited once a year, maybe.
Mm.
They need these things to be right, and that can get really messy. But for the most part, I'd say investors, like you're saying, it's not as it's not as frequent
Mm.
for investors at the later stages to have that activity.
I love that you brought up, those secondary transactions and liquidity. It's super important. I guess, of course, we've got IPOs in great cases and M&A in great cases, and sometimes not so great cases, but at least we have
Yeah,
liquidity. But there are
yeah,
these smaller, liquidity opportunities whereby early investors and employees are able to create, full or partial exits for themselves, managed in part by the
yeah,
company, but in part by the equity holder as well. It's a pretty important mechanism. What percentage of
yeah.
your
I
companies
think
would you
so.
say allow that? Like, are most late stage companies allowing something like that, or is it few?
Yeah, I would say taking our later stage ones who could allow that, I'd say more than the earlier stage ones. It's still a very small percentage, maybe 10 to 15% are actually allowing that to go through. And I get it. I see the company side of it too. I see both sides because the company, in a way, a lot of them want to control their cap table. They want to know who's investing. They want to know who is on it. They don't want a lot of random people who they don't know. And even when they, kind of facilitate those secondary transactions in a way, they don't know the investors like they do when they're going through a fundraising round or
Mm.
that they're employees at the company. So I can understand why it's still few, but I do think it's important to offer some type of liquidity because I mean, everybody knows private companies are staying private longer.
Mm.
The IPO market is not there right now. Maybe sometime it'll bounce back, but it's not there.
Fingers
Um,
crossed. Yeah.
and and so the options really are allow that, do a
Mm.
tender offer,
Mm.
which if you don't know what a tender offer, if anybody doesn't know what a tender offer is, it's where it's a company facilitated secondary transaction where usually they allow their employees and other shareholders to sell 10, 20, 30% of their holdings at a single time. And then they usually cap it. Sometimes that comes with a funding round. Like an investor is saying, I want to put in 100 million. We're going to give you 50 million for the company itself, but we want to buy an additional 50 million from your shareholders to offer them liquidity. Companies like that because they can provide liquidity for their employees. And I think that's another great option.
It's an absolutely fantastic way to do it because as a company, you're doing a lot of the work already, right? You're getting everything ready,
Yeah,
you're pricing, you're lining up the investors, the whole cap table operational function is enabled, and
yeah,
then you can create liquidity in a reasonably organized way that isn't
yeah,
costly and messy. So yeah, I think having primary and secondary is probably the premier way to do it these days.
yeah.
Mm.
I think so too. And
Nice.
I love when companies can offer that to their employees because
Yeah,
as an employee,
I absolutely love it.
you
I'm all about,
yeah,
I think it's just so critical. The wealth creation in startups is, I mean, aside from like the family home, which we hope, is
yeah,
the thing. It's so hard to build equity assets as a, regular member
yeah,
of society. But in startups, you absolutely can, but then you need to be able to get some cash in the bank
yeah,
at some point. So yeah.
yes. Yeah, too many founders are going and paying themselves minimum wage for too
Even the
long.
founders, like the founders need it too, like they can be more powerful and go on and do bigger and better things. So I think it's important for and investors like early angels, if they never get liquidity, they can't back the next company. Like they're just sitting there on their
Yeah,
5, 10 or 20 holdings going, oh great. Like this
yeah,
isn't just a one-way street. I need to get some cash back in the
yes,
kitty to back the next gen. So it's like critical. So I really love hearing when companies advocate and execute these things. So thanks for
yeah,
sharing a bit about that. Hey, I'm
of
gonna just
course.
let's get into the whole like cap table war stories. Let's talk a little bit about
Oh
like
yeah.
what
Oh
can go
man.
wrong, the worst things you've seen. Like, let's just dig into a little bit of that, and then we can pivot into, hey, like, how do we actually get this thing humming from, pre-seed and seed, and so we can really make it a real asset for the company.
Yeah. I've got three specific stories that I'd love to
Great.
share, and I will be brief and vague enough, but also specific enough.
Name names, name names. No, don't. Of course, don't. It's too
All right,
serious.
so Bob, listen, Bob, I'm just kidding. Um, so there's the first one I wanted to share was actually one of our first clients, and this happens quite a bit. Um, the company came to me initially and they said, we don't know if our cap table is right. It's a very common thing that happens. As
Oh,
you know,
totally.
we don't know if it's right.
Yeah. If you're not getting help 99% of the time, it's probably not right.
Yeah. Yeah. And they said our lawyers have been in it, which it's very common to have attorneys managing this for certain
Yeah.
companies if they have the cash to do so. So
Attorneys are
they
very good
said,
at words. Just so everybody knows, attorneys are very good at words. A cap table's full of numbers, so just bear that in mind.
well, okay, real quick before I jump into this, that's the funny part. I thought starting this business, I thought I'd be competing against attorneys. When I started talking to attorneys, they said, we don't want to do this
Like,
work. They said, we would love you to do it and take it off our hands. Even the paralegals, it just wasn't, they could bill for it, but it just
yeah,
wasn't their forte. They didn't want
yeah.
to do it.
I've learned that too.
Um,
They're very good at reading and writing and negotiating, but the numbers bit, they're like, look, just help us out.
yeah,
Anyway,
so that was a fun one to learn.
mhm.
Which is great. I don't want to compete against attorneys, so it's helpful to partner
No,
with them
that's
instead.
great. Yeah.
So this company comes and they're like, our attorneys have been in it, our finance people have been in, our general counsel has been in it, but we've had two general counsels and we really just don't know if it's right. We need a full audit, a full cap table audit. And this is one of the things we do for usually for later stage companies when they're thinking about a transaction or an IPO. And so but this one I want to transition into what we can do from the beginning, because this was a Series D company and they came to us and said, go through everything. So we said, okay, give us every single board consent you have, give us every agreement you have, give us everything from the beginning. This company specifically had been around for 10 years. So there was a lot of activity. I'd say, we could have spent even longer on this, but we spent about 4 to 5 months going through all of this. And you can
Wow.
imagine, like, this was before AI was super cool yet. It existed, and then I'm sure there's a lot of tools that we're actually thinking about, that can help with this stuff. But we went through 4 or 5 months of reading every single legal document they had that pertained to equity. Found a million errors. Right, we started working with the legal counsel to do it, and for them, the company, it cost somewhere between $30,000 and $40,000 to get our help with that. But I don't think of it, and they were probably grateful for that it wasn't going to be $100,000. But on top of that, we were also talking to attorneys, past attorneys. We were talking to their general counsel all the time. We were talking to their finance people. All of those people's time, everything that they get paid, whether it's an hourly or a salary rate, was going into this project. And they were so grateful when it finished, right? But I could imagine to the company that was at least $100,000 to $150,000 worth of time and cost in total for doing that.
Mm.
And that can be mitigated if you do it right from the beginning by getting help from a trusted source. And I'm not saying you have to hire me, because there's plenty of other people who are trusted. You can find attorneys who specialize in this. You can find flat rate attorneys, right? You can find CFOs, fractional CFOs, people who understand this. make sure it's right from the beginning and make sure it's right as you go along. That's why I was talking about the importance of audits, right? Monthly audits, making sure it's all right. And on top of monthly audits, do a biannual, a semi-annual audit, do an annual audit to make sure that it's all right from the past. Because
Totally.
it's going to cost you 10 times or 100 times more down the road to get it all fixed. It was either an IPO or acquisition, and it delayed it about 6 months after that to when they wanted it to be done. And so those transactions can really delay anything that you're trying to do. Fundraising rounds can also be delayed from this because
Definitely.
the investors are wanting to do due diligence,
Mm.
on all of this and make sure it's all right. So that's
Yeah.
number one, and that
They
happens
don't,
often.
investors don't allow skeletons in the closet with the cap table. They want to see every document. They want to make sure there's nothing kooky in there because that can come back and bite them.
Yeah,
So yeah, you can't. And when you're doing these fixes as well, it's important to note that it's the most senior people that have to be involved because they've been
yeah,
involved. Like, where's this contract? Where's that contract? Where's this? Where's that? We're talking the
yeah,
founders, the execs, and the COO or whoever it is. Like, they're all there being dragged away from other critical work. So you have to
yeah.
sort of stay on top of it along the way. Otherwise, this is like a huge headache.
Yeah. And you never know when someone's going to leave a company. Founders can leave a company,
Mm.
5, 10 years in or sooner. And if they're critical to that conversation that might take place later, it's important to have that. It's also important to have all the organization. And I feel like this company did not have that organization. It was really, they sent us paperwork from everywhere. If you have it all in a Google Drive folder, in a Dropbox folder, in some kind of like folder, right, where that can be shared, and you have every piece there organized, it's a million times easier to
You
audit
gotta
that.
get in early with something like cake, let's say that, because of course there's multiple
Yeah.
providers, but every single document signed in the system, it's automatically saved in the system, and every little
Yes.
bit and piece is just so much more likely to be there when you need it. You build it up from the ground, and then you're having a tenth of the issue all the way along.
Yeah. Exactly. It's so important.
All right,
So
what's
number
what's the
two,
story number two? Yeah.
so story number two, this was I I like to say fun one, but that's kind of sarcastic. Um, we went through, so this was a company who came to us initially and said, we just want help managing our cap table moving forward. There was no audit work to talk about before, but as you know, and as many people know, things that happen in the future are affected by things that have already happened, right? Especially when it comes to equity. So as we were doing some equity work, some of our team members found, wait a second, this conversion looks weird. This investor had a safe. Other investors had other convertible notes, and the conversions looked a little off. So we started doing some calculation. That's something we started doing a little bit of. It's like pro forma calculations and modeling these things out. And he found, or one of our team members found that there were two full rounds of financing that had been converted wrong.
Mm.
And he double checked. I mean, he triple, quadruple checked himself to make sure that that was right. Because we don't want to come back to the company and say everything's wrong on your entire cap table. Um, but double, triple, quadruple checked himself, and then we brought it back to the company, presented to them. Their attorneys then started looking at it and looked over it for the next month. Came back to us. We started redoing it and kind of showing them what it should be. Took it back to their attorneys. It took a year and a half of back and forth. And we weren't as involved for about a year that we did, right? We did a lot of work up front, took it back to them. It took a year and a half of going through attorneys, going through other people to make sure that things were, they knew that it was wrong, to make sure that things were right. They had to go back to their investors. Can you imagine going to all 30 of your investors, or 100 if you had 100,
Mm.
and saying, we messed up your calculations. Yeah, this was 2 years ago.
Mm.
And the number you got 1 million shares. It's actually supposed to be 400,000.
Mm.
Is just a nightmare.
Yeah.
And so it took
Nobody
about a year. Yeah,
Nobody ever wants to
it
go
was.
through that. If you're doing, yeah, if you're not experienced, there's lots of little tricks and trip ups like that. Converting safes
Yeah,
to points is like one of the bigger traps for making errors.
yes. It was such a mess. I mean, we're still working on it actually to this day.
Mm.
Um, with that, I will say, I this is not a bash on attorneys whatsoever. You got to find the right attorney.
Mm.
You got to find the one that understands and knows equity specifically, because we've met a lot of people who are like, oh, my friend is actually an attorney and they're my attorney and they're handling every piece of legal thing for my company. But oh yeah, they were a litigation attorney. They know nothing about startups.
You're in big trouble
You
if that's
got to
the
find,
case. Yeah.
yes. And that's my third story. So I'll get to that too.
Yep.
Um, you got to find the right people for this. You got to find the right attorneys who understand. You got to find the right help advisors, people who get it. And, sometimes you might need people to double check each other's work. Because honestly, especially when it comes to modeling rounds, there are a lot of nuances. There's a lot of things when investors have preferred, participating preferred, or they have 2x, which means they get at least double their investment, or if the later exit is greater than that, then they can choose double their investment or the greater amount, of course. There's a lot of nuances that come with that have to be put into place. And, honestly, even a lot of modeling softwares out there don't can't take care of 100% of the cases. A lot of them can do like 90% of the cases or 80% of the cases. But that's something that I strongly advise to every company that I talk to is make sure you get someone who's gone through this exact thing before, even your industry.
Mm.
Get the right people in place who know what you're doing, because, and I tell them this story, it's been taking a year and a half, and we're finally getting the cap table right, and we had to redo it all.
Wow. Yeah.
Crazy.
No, I absolutely love that advice. I constantly advise founders to get a startup accountant and lawyer, get that team set up as early as possible, because it's nothing against the professionals. They're great people, but
Yeah.
with law particularly, you can't do all law in one person. Like
Yes.
there's just too much variability. And startups is an extremely specific thing. So yeah,
Yeah.
really great advice. Save you so much time and money and pain and just getting the right person on your team there. Awesome.
Oh yeah.
In the interest of time, I'm going to have to move us on to the final question.
That's okay.
I think this has been cool. It has been a little bit more heavy than some of our sessions, but it's great. Like every few episodes, we need to get right in there and dig into the nuts and bolts of equity. So we've done, RSUs and ISOs and NSOs. We've done exercise periods. We've done enterprise stuff. We've done some lessons and great pieces of advice. And so very grateful for all that. And as many of you know, we like to finish with a creative, healthy lifestyle question. And when I was there, I don't know, like the lifestyle in Utah seems very healthy and a bit outdoorsy. How do you see health in relation to your success and ability to, be a great human?
Yeah, I love that question. So you mean physical health, physical, mental, all
Yeah,
that good stuff?
all that stuff. Yeah, like just for a bit of background at Cape, we sort of see our health as the most important thing. Like if you're physically
Yeah.
healthy and you're mentally healthy and you're coming at life with great energy, you're so much more able to, just be a great person, achieve things, be creative, and just come at life in a positive way. And so I just like to learn a little bit about how other people see their health and how they manage it,
Yeah.
maintain any tips or yeah, just get a bit of insight.
I love that question. And if anybody wants to talk to me about this more in depth, please let me know. I have a lot to say on this. My wife is actually a mental practitioner, mental performance, person, you could say. Um, Mental health is a big thing, and also physical health. It's really interesting that I never thought I'd say this. I'm not as maybe muscular or fit as I was back in high school, but to be I'm 31 right now, for anybody who cares. And to feel better physically and mentally right now than I did in high school or college is such an amazing thing. And I've found that I've gone very up and down with this and having children and having, time commitments and going back and forth. But it's amazing how much both food as a source of health, can affect you if you're eating the right things. Exercise can affect both physical, of course, and mental health. Getting outside, I do love Utah because, especially in the summertime, it's just beautiful weather. In the springtime and fall time, it's, you can get outside. In the wintertime, there's skiing, there's snow sports that you can get outside. Most people don't get outside as much because it's cold. Um, but it is very outdoorsy here. And for me, I like to go on walks. Walks are a huge thing as well.
They're
I can just
awesome.
we've got a 2-month-old. And so this morning he woke up
Walking
and
is so underrated. It is
it
such
is.
a way to move and be in nature, and it's not super stressful, but you're still getting really great energy. Mm.
Yes, it is so underrated. So I've been taking walks almost daily. This morning we took a walk. Something new I also tried. Sorry, I'm going too far into this though. I go really in depth to things, and I'm sorry.
No,
My
no,
wife
right.
discovered contrast therapy, sauna, and then cold plunging.
Oh yeah.
And that has been a wild experience. I've always loved the sauna. We go to this place called Plunge it's a Finnish sauna, so it's about 200 degrees and the water is about 40 to 45. I've
Yep.
never been in that hot of a sauna, but
I did it
you go
today.
in.
I did that this
Did
morning.
you?
Yeah.
That's awesome.
Would be
It's
great.
amazing that it
Mm.
just feels so good. And so what I've been doing is also I take walks and then about 2 times a week, I'll run 2.5 miles to this place, do the sauna, do the cold plunge, do the sauna, cold plunge about 3 times each, and then I'll run home about 2.5 miles. And I feel amazing.
Thanks for sharing. Just about every successful person I have on here is committed to their health in some way and their mental health and has great
Yeah,
habits. And I just like to take this little bit of time each time to reflect on that, remind everybody where it's at and how important it is. So thanks for sharing, and thanks for
I
coming
love
on.
that. Thank you.
You're an
Yeah,
amazing guy, great energy, so knowledgeable in this space.
thank
If
you.
anybody needs a hand, definitely reach out to Chris. And yeah, thanks for listening. Thanks for joining us, Chris.
Thank you so much, Jason. Good to be here, and thanks everybody.